Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia struggle as investors assess the impact of weak US factory activity on the Fed's path to easing rates. Indian stocks tumble as early vote counts point to a narrower win for Modi than expected in the country's election. Plus, Israel says there will be no permanent ceasefire in the war in Gaza until Hamas is destroyed, pushing back on a proposal by President Biden. Let's check in on these markets, and certainly the focus is on what's happening in India. But before we get there, the data out of the US, the softness, particularly when it comes to manufacturing, the ISM survey coming in well below the estimates and suggesting that there is a cool down now happening in the US. Repricing around the Fed, then expectations that maybe there's a 50-50 chance the Fed could even cut as soon as November. September is certainly not off the cards as well. In terms of the moves on India, we'll get there then, before we get onto the cross-asset story then, because you have a significant sell-off, reversing the gains that we saw yesterday in terms of Indian stocks. The rupee is under pressure, bonds are under pressure, and that's because in the early tally of the vote counts coming through from that country, it seems to suggest that the sizable win that many had expected, 400 or plus seats for Modi, is not going to be what's happening. That's what's suggested by the early counts, and so you're seeing a reversal of yesterday's trade, and it's quite pronounced, particularly around the Modi-exposed stocks. The Adani Group, for example, taking a big hit in the session. Across the 50 Nifty, you're seeing losses now of 2.3%. The Sensex is down 2.4%. And again, Indian bonds under pressure and the rupee down 0.2%. Let's get to European and US futures then. As we think about the Fed repricing on expectations, or at least further evidence that you are now seeing a bit of a slowdown in the US, or at least the fringes of a slowdown, particularly given what we saw around the cooling of the consumer in the US, now the factory story, and particularly when it comes to new orders and the prices components within that, certainly the slowdown is coming through across manufacturing in the US. US futures then looking lower just by 0.1%. You did have a little bit of upside coming through, ending in positive territory by the end of the day yesterday. Part of that was the technology story. FTSE 100 futures here in the UK looking to losses of just shy of 0.1%. S&P futures, as I flagged, currently unchanged. Nasdaq futures 18,644, currently flat. Looking for the next catalyst, it seems. Will it be the JOLTS data, the job openings data later today in the US, or indeed non-farm payrolls? Really crucial in terms of the job story of the US out on Friday. Briefly then, cross-asset, because you did see a big rally in treasuries and bonds. Yields fell 11 basis points on the 10-year yesterday, currently at 440 on the 10-year, just a move of 2 basis points. The pound at 128 versus the US dollar. Brent also took a hit yesterday on the details around OPEC Plus, looking to put some production, increased production back on the market as soon as this year. $77 a barrel on Brent, down 0.7% in today's session. And Bitcoin, by the way, crossed back above 70,000. It's now at 69,000. Just shy of 69,000, down 0.1% so far in the session today. Let's cross over to Asia now. Singapore, where Avril Hong is standing by with a check on the markets in that part of the world. Avril.
Yeah, Tom, really interesting how today, for the first time in a long while, we're seeing how bad news for the economy is turning out to be bad news for markets. The Nikkei, the Kospi, both in negative territory after that weak US factory activity data, raising concerns about recession fears. In terms of sectors, energy is leading losses after we saw the way that Brent crude traded. We're also seeing in specific stocks, Toyota is among those that are the biggest drags on Asia stock gauge, and this is against the backdrop of Japanese regulators raiding its offices amid the safety scandal that's hit a number of these Japanese automakers. Chinese equities kind of doing their own thing today. I think there is some optimism of stabilization in the real estate sector. Okay, let's flip the board. I want to take you to what we're seeing in bonds, because it's really interesting how we're seeing a bit of a divergence. It was risk off in Japan, in South Korea, but take a look at how they are faring in Japan bonds, Australian bonds, New Zealand bonds. They're tracking the gains in US treasuries overnight, and that is against the backdrop of optimism of Fed rate cuts. So this mixed performance seems to suggest that investors are really waiting out for more data. Remember, we get the jobs data out on Friday that I think investors will be given something more to chew on. But something else is really interesting in Japan today as well is remember how we've been really talking about Japan bonds headwinds, given the expectations of potentially these rate hikes coming through from the BOJ, it reducing its bond purchases as well. That's prompted higher yields, and it seems to have been enough to draw in investors to the Japanese bond markets, because today we got a 10-year auction that saw pretty solid demand. That's what we're seeing in the bond space. Let's flip the board and take a look at what we're seeing on dollar yen, because we are seeing a softer greenback, but that doesn't seem to be helping the Japanese currency, weakening towards the 157 level earlier today. And this is on a day where investors are kind of digesting the comments from the finance minister for the first time since late April, early May, acknowledging, yes, we stepped into the market, saying that the intervention was effective to some extent. Tom.
Ava Hong in Singapore with a check on the Asian markets. To the top story of the day, at least for now, Indian stocks then reversing those gains that pushed them to record highs. As I mentioned, this is euphoria around exit polls that predicted a landslide third term for Prime Minister Narendra Modi started to wane. Joining me now is Bloomberg's chief Southeast Asia correspondent, Haslinda Arman, who is live for us on the ground in New Delhi and has been following this all for us across the morning. Has, thanks for joining us. What is the latest then with the count out of India?
Well, Tom, it is a fast-changing story, a fast-changing picture. In fact, not the same picture as when we kicked off the vote counting 3 hours ago. Now, remember, we talked about those exit polls expecting Modi and his allies to garner about 350 seats out of the 543 at stake. But at this juncture, these are the numbers that we have. Modi and his alliance leading in 271 seats, and for the opposition party leading in 184 seats. Now, the margin for the BJP as well as Modi shrinking as we speak. It is not what the market anticipated, and hence we're seeing that reaction in the market. In fact, if you take a look at the Nifty, it surged more than 3% yesterday, the biggest surge in about 3 years. And today, we're seeing it down by almost 3%. So giving up pretty much all the gains which it had yesterday. Now, disappointment, obviously, and disappointment for Modi. If this line of gauge continues throughout the day, we'll get the official numbers in the hours ahead. We'll know the trends in the hours ahead. But right now, disappointment pretty much across the board.
As you scrutinise the vote count then that comes through after this, 6-week election in India, which states are you looking out for in particular?
Well, there are several states in focus. Gujarat, for one. I mean, this is the home state of Modi himself. And if you take a look at the last election in 2019, the BJP party secured all 26 seats. The other one is Uttar Pradesh. This is the most populous state in the country. 80 seats up for grabs, and in the last election, the BJP secured 62. If you want to win this election, it is important that you win Uttar Pradesh. Also, Maharashtra. Maharashtra is the state that is home to Mumbai, which is the financial sector. If you've been following the story there, the traditional alliance in Maharashtra state has fallen through. So it is up for grabs. We do not know how it will fall. And of course, when it comes to the southern states, they're in focus because Modi and the BJP have had a difficult time trying to make inroads in the southern states, the likes of Tamil Nadu. The states are pretty much richer and more educated than the rest of the states in India, and they have pushed back on Modi's pro-Hindu narrative simply because they're non-Hindu speaking, and also because they want equality when it comes to the wealth of the country, better distribution. And that is what the opposition parties have capitalized on. And perhaps that is the narrative that is winning them votes right now.
Really, really fascinating in a turn of events that many had not expected out of India. Covering it all for us, Bloomberg's chief South Asia correspondent Haslinda Arman, who will be back with us, I'm very pleased to say, in the next 20 minutes for a further update in terms of the vote count out of India. A crucial story for us today. Has, thank you very much indeed. Turning focus back to the US and the data there that we got out overnight. Concerns about the health of the US economy are outweighing, at least for now, expectations of early Fed policy easing after weak factory activity data. Friday's US jobs report looks set to be the next big catalyst. Let's bring in then MLive strategist Ven Ram, who has a finger on the pulse on all of this for us. Ven, does the rally that we saw, and it was a pretty sizable rally in Treasuries, 11 basis points in some parts of the curve overnight, does it signal, do you think, a turning point for these markets?
Morning, Tom. As you say, the ISM data caused the markets to question if you're at an inflection point for the U.S. economy. After all, we saw the manufacturing gauge come in weaker than forecast, the prices paid component moderate. We had seen some heavy selling in treasuries in the quarter leading up to the data. So there were some short positions that were presumably taking some money off the table on the back of that news. But if you look at the sectoral composition of the data that we got, we saw 7 sectors reporting an expansion and 7 reporting a contraction. Now, in a typical inflection point in the economy, you will see more of the sectors, pretty much an overwhelming number of sectors going southward. And that is not what we are seeing. We are seeing weakness and strength being pretty balanced at this point. So what we are seeing is an economy that is kind of incrementally moving towards slowing further and further. But is it the inflection point? I don't think so. I mean, if you look at the labor market, the Fed thinks that we need a jobs unemployment rate above 4% to bring the market back into balance. And this week's data that is upcoming on Friday is forecast to still show a 3.9% number. That's not enough, and that's not nearly an inflection point in the economy, Tom.
OK, this is not the inflection point. I wonder how all of this feeds into expectations then around the Fed's forecast, the dot plot that we should be getting next week then. There's been a debate, of course, as to whether they adjust from 3, that's their current setting, to 2, to 1. Where do you think they land on this? What are you preparing for when it comes to those updated forecasts?
I think that, it will be too much for the Fed, Tom, to acknowledge that they've made a mistake here and go from 3 to 1 cuts. So I expect the median to show 2 cuts. I mean, obviously 3 cuts at this point. We are almost at the end of the first half of the year, and it doesn't look like they will be able to show on 3 cuts in by the end of the year. So I think that some of the hawks on the council will indicate just 1 rate cut, I think, and I think there are plenty of examples of that. I think Neil Kashkari would fall into that camp. I wouldn't be surprised if he indicated just no cuts at all this year, in fact. But, I think that the median will still show 2 cuts, and that gives what that will do is give the Fed wiggle room to cut if things start going pear-shaped quickly enough. We are not at that point, as I said. We are not yet at that turning point in that economy, but the Fed will want to give itself room, given that there are still 6 more months in which to get their act together. So I think that's quite a possibility.
MLive strategist Ven Ram, always smart on how to think about the Fed and repricing. Ven, thank you very much indeed. This story kind of ties into it as well, because anyone who's arguing that there's still too much liquidity in the system might look at GameStop and what's been happening with shares. Surging yesterday after the Reddit account that drove the meme stock mania of 2021 posted what appeared to be a $116 million position in the video game retailer. The screenshot posted by Keith Gill showed a stake of 5 million shares. Let's bring in Bloomberg's Charlie Wells, who's been following the twists and turns of this once again fascinating meme stock story. What factors then? Roaring Kitty, deep F ... value. What catalyst drove? Is this just one man and a flashcard, one man and a tweet, and you see at one point a 70% rally? What is going on, Charlie?
Well, I want to know what's going on Keith Gill's Sunday nights, because that is when he posts these tweets. This is when he gets on Reddit. So Reddit was the latest platform that he took to show this position. And let's remember that position also included 120,000 call options to buy shares later in June at $20 a share. Now, look, it really is this guy. I mean, let's not forget that Keith Gill is one of the main actors from 2021 who helped propel GameStop, over 2,000%. It's looking based on yesterday like this is not going to be 2021. Shares started, the day before at $23. They jumped to 38, ended at 28, so a 21% gain. But again, no fundamental change in GameStop. This really was Keith Gill sending out a social media post.
Wait, shock horror. This isn't about the fundamentals of GameStop.
Surprise, surprise.
E-Trade. So he took a photo of his account. What appears to be, we haven't verified it, an E-Trade account with these options and the 116 million or so in terms of the holding. Now there's reports suggesting that E-Trade may boot him off the platform.
This was an interesting story in the Wall Street Journal, according to people familiar with the matter at E-Trade, a platform that Gil does use. Now, this goes back to the rally that his social media postings appeared to spike in May, when it appears that Gil bought a large volume of call options before that tweet that sent shares soaring. And so the concern here is that is stock price manipulation. And so they have been looking into potentially closing his account. E-Trade has wide latitude to do this. We know, according to people familiar with the matter, that no decision has been made. But of course, this gets at this debate, and we know the SEC is looking into this, is, how much power do these influencers have to manipulate stocks? That's one side of the debate. The other is there is this huge following that these retail investors, these retail influencers have. If you kick Gil off the platform, do you get the wrath of that army? Do you lose other customers? And so that is the debate that they're trying to reckon with here.
Yeah, and that wrath can be quite something, can't it, amongst retail traders. Charlie Wells, thank you very much indeed on the latest around Roaring Kitty and what that trade is doing to GameStop and others within the meme stock space. Charlie Wells, thank you very much indeed. Coming up, Israel's Prime Minister reiterates there will be no permanent ceasefire unless Hamas is destroyed. That's as the war in Gaza enters its 8th month. More from the region next. Plus, Bloomberg has learned that Russia is pursuing uranium assets in Niger. We will have that story for you shortly. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Israeli Prime Minister Benjamin Netanyahu has repeated there will be no permanent ceasefire in the war against Hamas in Gaza. That is at least until Israel's conditions are met. But he says the country is willing to pause hostilities for the sake of hostages. Let's get more on this story then with Bloomberg's Horizons anchor, Jumana Pasecci, who is in Dubai for us. Jumana, what is happening on this front then? President Biden says there's a 3-step plan for peace. He said it's Israel's plan potentially for a ceasefire. Israel now coming out and saying there will be no ceasefire unless its conditions are met. What are we hearing from Israel on this front?
Yeah, I think the language that has come out of Israeli officials, and particularly the prime minister of the last couple of days, is pretty telling. Prime Minister Netanyahu essentially saying that the permanent ceasefire idea is not something that they're going to pursue at this point in time, namely because they haven't yet accomplished their main condition, which is the full dismantling of Hamas's governing and military capabilities. So, of course, this does raise questions about that Biden proposal put forward on Friday. It was a 3-phase plan. The first phase was a 6-week truce that would enable the exchange of hostages, a subsequent then withdrawal of Israeli forces, and then finally the permanent ceasefire. It is on the latter that the Israeli officials have come down very hard. However, the Prime Minister has signaled that they're willing to talk about a potential pausing of hostilities if that does allow for an exchange of hostages. And it is worth pointing out, Tom, this doesn't get a lot of attention, but there have been mass protests within Israel, Tel Aviv. 120,000 people took to the streets over the weekend, calling on the Prime Minister to accept this ceasefire proposal and also pushing for that release of hostages. So public pressure within Israel is building on Netanyahu to accept this deal and to push for the exchange of hostages.
Yeah, that's an important dynamic, isn't it? That domestic pressure as well as the international pressure on the government of Israel. What are the next steps then, Jumana?
Well, one of the main dates that potentially could or could not happen, the Prime Minister Netanyahu is set to address the U.S. Congress. The date floated was June the 13th, though we're hearing that that may not go ahead because it is a Jewish holiday. But I think it does still underline the fact that the Prime Minister has a willing and receptive audience in the likes of U.S. lawmakers. So that could be a potential date to watch out for. But even before that, you may recall back in May, one of the centrist allies in the government, Benny Gantz, imposed an ultimatum on the Prime Minister. And he said that unless he comes up with an alternative plan of what happens once the war is over with respect to the Gaza Strip, then he would be looking at leaving the government. And that is set to happen on June the 8th. So that is another date that we need to bear in mind as well. In addition to that, we've heard from other members, more right-wing members of the Israeli government, saying that if he does sign on to this proposal put forward by Biden, then they would also leave government as well. So there is a lot of pressure on Netanyahu from all fronts, be it the right-wing coalition allies, the centrists, the public, and of course the international community who are watching what is happening at Rafah very, very closely right now.
OK, Bloomberg Horizons anchor Jemana Pastechi in Dubai. Thank you very much. Now, Bloomberg understands that Russia is seeking to take over uranium assets in Niger, currently held by a state-controlled French firm. Let's get the details then and bring him in. Bloomberg's Ondiro Oganga, who is in Kigali for us. Ondiro, what do we know then? Apparently, there's apparent Russian plan to take over these assets.
Tom, what we know so far is that conversations are going on about acquiring mining permits, but it's not clear what kind of assets Rosatom is interested in, because the negotiations are really at an early stage and transfer of assets has not been laid down and the terms that will be done. And Orano is a really important company because it's a majority shareholder in other small companies that do open pit mining, underground mining in Niger. And though they maintain that they're not aware of any deal between Russia and Niger to take over their company, the International Atomic Agency says that it's aware of potential transfer of uranium assets. And where it gets interesting is that Niger accounts for 4% of global uranium production, supplies France with 15% of their needs, and EU 25%. So this Russian acquisition is likely to split the market, and we are likely to see US and their allies wanting to import from aligned countries. The only problem is they do not have domestic production.
Fascinating story with the details. Ondiro Oganga, thank you very much. Don't miss, by the way, Bloomberg's monthly deep dive into the political and economic landscape around the continent, increasingly that geopolitical landscape as well, on Africa Amplified. It's this Friday. South Africa's election, of course, will be in focus as we speak exclusively to the economist and political analyst Moletzeti Mbeki. This is Bloomberg. Now, Ford says it is just 2 years away from offering technology that will allow drivers to take their eyes off the road and their hands off the wheel. President and CEO Jim Farley spoke to Bloomberg's David Weston.
We're getting really close. In fact, we can do it now pretty regularly with a prototype, but doing it in a cost-effective way is just the progress we're going to need to make. We have to build the electrical architecture inside the company. We can't delegate it to our suppliers anymore. We need all the software code in the company to control the car, but it's close. I've been doing this for 40 years. I worked for Toyota for a couple decades. I've never seen a competition like this. They have full sponsorship of their government. The government bet on EVs before anyone else in the world. They're the largest market in the world, and now they're the most important market in the world.
Ford Motor President and CEO Jim Farley speaking to Bloomberg. Now to some of the stories making news today. A glitch during a software update early yesterday led the NYSE to wrongly halt trading on about 40 stocks and display odd trades, including, by the way, a 99% drop in Warren Buffett's Berkshire Hathaway. The disruption is the third episode to hit US markets. Just in the past week, the exchange reverted to backup data to resolve the issue and says it will cancel the bad trades. Coming up, Indian stocks tumble as early vote counts point to a narrower than expected win for Narendra Modi. We are live in New Delhi with the latest as the Nifty 50 and the Sensex currently post losses of more than 3%. The Nifty down almost 4% so far. We're back on India and that election after the break. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia struggle as investors assess the impact of weak US factory activity on the Fed's path to easing rates. Indian stocks tumble as early vote counts point to a narrower win for Modi than expected in the country's election. Plus, here in the UK, Prime Minister Rishi Sunak is dealt yet another blow as Brexit architect Nigel Farage says he will stand in the general election. Let's check in on these markets then, and we'll do a deep dive on India just in the next minute. But briefly, on the back of softer data out of the US when it comes to manufacturing and factory orders, that is now planning to play into expectations around the Fed, with markets now pricing in the possibility of a cut in November, pulling it forward from December. European futures pointing lower by 0.1%. These are also markets looking, it seems, for the next catalyst, and possibly that comes through with non-farm payrolls on Friday. FTSE 100 futures pointing lower by 13 points. S&P futures currently flat after very modest gains yesterday. Nasdaq futures also flat, and again looking for that next catalyst. Let's flip the board. There was a rally in US Treasuries yesterday on the back of that weaker ISM manufacturing data. 440 on the benchmark 10-year right now. The pound at 128 versus the US dollar. Brent and oil prices fell yesterday on the details around OPEC Plus, putting some additional production back in line later this year. That is the expectation. $77 a barrel on Brent. And Bitcoin briefly crossed above 70,000. It is now the major cryptocurrency at 69,000, just down 0.1%. Let's get back to India, though. This is the story of the moment. Stocks in that country and bonds slumping as early vote counts suggest a narrower victory than expected for Prime Minister Narendra Modi. Joining me now on the ground in New Delhi is Bloomberg's chief Southeast Asia correspondent, Haslinda Armin, who has been following all of this for us. Haslinda, we talk about the knocks to the equity markets, and it's been quite pronounced. What is the latest then in terms of the count out of India?
Well, Tom, it's not quite the same story as when we kicked off the vote count 3 hours ago. In fact, if you recall, just over the weekend, we had that exit poll suggesting that Modi and his allies would win a landslide majority. By that, we mean about 350 seats, and that is the minimum. If it's up to Modi, he's looking for 400 seats, which would be a super majority, but not the case as the vote count continues 3 hours on. These are the numbers that we have right now in terms of BJP and its allies. We're looking at them leading in 278 seats, and for the opposition parties, it is 186 seats. Now, they're leading in 186 seats, which is a wider margin than most had expected. Remember that the opposition parties have struggled in the last two elections, but this time round, they came together under one roof, more than 20 parties calling themselves India, and they've adopted a policy of ensuring that people know that Modi's wealth, Modi's growth that we've seen so far, 8% is what we're looking at, has not been equal. And perhaps it is that messaging that's impacting the voters right now. So as it stands now, the BJP party and its allies seeing a narrower gap than that was expected, and hence we're seeing that playing out in the market. You talk about how the Nifty Index currently down by about 4%. Remember, it rose more than 3%, which was the highest in about 3 years. It's given up more than it gained yesterday.
Yeah, indeed. The markets clearly had not priced in this result. And the results, of course, not fully rounded out, as you've made clear to us. A 6-week election, 640 million or so voters. What states, and they all have their own idiosyncratic stories, which states are on your radar, Haslinda, going forward?
Well, there are basically 4 states we're looking out for in particular. One, Modi's own home state, Gujarat. This was where Modi and his allies won 26 seats, all 26 seats that were up for grabs. Uttar Pradesh, which is the most populous state, here 80 seats up for grabs. If you want to win the election, you got to win Uttar Pradesh. And in the last election in 2019, we had the BJP and its allies winning 62. We're also keeping a watch on Maharashtra. This is where Mumbai is. You know, Mumbai is the financial capital of India. The thing is with Mumbai is that the traditional alliances have fallen through, so it is pretty much up for grabs. And the southern states, the likes of Kerala, the likes of Tamil Nadu, they have traditionally voted for the opposition. This time around, let's see if the messaging that we've seen from Modi has worked, or the messaging from the opposition indeed. It is interesting that Modi put in a lot of effort in states which were dominated by the opposition parties. At 72, he had the energy to crisscross the country, talking about the Modi vision, about the Modi effect, and how the country has done so well under his government. In fact, over the last 10 years under Modi, he says he has lifted 250 million Indians out of poverty, but that doesn't change the landscape. 900 million still below the poverty line.
Wow, 900 million still below the poverty line. In terms of the majority for Modi, translate that story for the market story, the expectation. Why is it important to have that majority for Modi, to have a sizable majority? What does it mean in terms of policy going forward for this leader?
It's quite interesting, right? We talk about India growing at 8%. It is the fastest growing G20 nation out there. 8%. It's massive. But for India, it is not enough. It has a vision. It has an ambition. It wants to be a middle-income country by 2047. And for that to happen, it needs to grow at least 9% in the next 20 years. And for that to happen, we have to see very controversial reforms, land reforms, labor reforms. And Modi will not be able to put in place all these controversial reforms if he doesn't have that supermajority. There is bound to be opposition to the changes he wants to make. He needs to get 400 seats out of 543 to push through the reforms he needs to make India a middle-income nation.
OK, Bloomberg's chief Southeast Asia correspondent with a fantastic update out in New Delhi and battling the smog there, Haslinda Amin. Thank you very much indeed. Now to the UK's election, staying on politics then, but a very different story unfolding here in the UK. Brexit cheerleader and populist Nigel Farage says he will run for Parliament. He will run, days after, of course, ruling himself out. He's going to stand as the candidate for the Reform UK party, as well as taking over as the party's leader. Our UK correspondent Lizzie Burden is here with the details. Lizzie, we know that Nigel Farage is one for political drama, and my goodness, did he pull it off yesterday. What does this mean, though, for the Prime Minister, Rishi Sunak?
Yeah, as soon as Nigel Farage tweeted yesterday that he had an emergency announcement to make, there was a whiff of not just despondency but despair around the Conservative Party. He announced later on that he's going to stand in Clacton. It's this Eastern England coastal town where his previous political party had most of its success. And it's not as if we're imagining Prime Minister Nigel Farage, but the effect it's going to have on Rishi Sunak is it's likely to suck him to the right of the political spectrum. Now, we've already seen this happening, him trying to fend off the threat from reform. We've talked about it. It's why they've had policy announcements like a return to national service, this tax guarantee for pensioners, but that effect's likely to be even stronger, and it leaves the centre ground for Keir Starmer, the opposition Labour leader, to fight on. We had some more polling data yesterday, just before this announcement from Farage, YouGov modelling showing that Labour's headed for a historic majority, bigger than Tony Blair's landslide in 1997, the worst defeat for the Conservatives since 1906. So you remember that song that was playing in Downing Street, Things Can Only Get Better. When the election was announced, it really seems like things have only got worse for the Prime Minister. And,
of course, the Conservatives would say that the only poll that matters is the poll that takes place, of course, on July the 4th, as they continue to unveil their measures that they say will benefit the UK. That would be the argument from the Conservative Party. When it comes to there's a debate, there's a television debate tonight. So it's the Prime Minister against Keir Starmer, the leadership debate. How important is this, and what should we be expecting? How significant? Could it move the dial at all?
Well, in the UK, let's just put it this way, when Donald Trump's drama came out last week, that seemed to sweep up the headlines. And so this, for many people in Britain, is going to be the first taste, the first real spotlight on the election debate. You mentioned the charisma of Nigel Farage. Neither Sunak nor Starmer is really known for being an orator. So it'd be really interesting to see whether either of them can grab this moment today. In terms of approach, while Sunak's trying to fend off the right flank, Starmer, as I say, is going to focus on the centre. He really wants to prove that he is not his predecessor, Jeremy Corbyn, on either national security or economics. The Labour Party says that it wants to be the party of change. It wants it to be an economic election, but this was the subject of the Bloomberg UK Politics podcast yesterday. They're really not taking risks when it comes to economic policy because of the fiscal constraints in the post-Liz Truss era. Despite having this poll lead, they aren't offering to raise any of the main levers of tax. And so our economists at Bloomberg Economics are asking how much difference will it actually make to growth? The Institute for Fiscal Studies has said you can't just hope and pray for growth. And I thought it was really interesting this morning that our economists' analysis says it might not make much difference if whoever is elected in terms of growth on July the 5th.
Fiscal constraints are clear, aren't they, for many? Lizzie Burton, thank you very much indeed, of course, our UK correspondent, with the preview of that leadership debate that takes place later this evening here in the UK. To the EU now, the EU's landmark climate policy. The climate policy could be under threat after this week's European elections. Back in 2020, the bloc adopted what was called the Green Deal, still called the Green Deal, of course, a commitment to become carbon neutral by 2050. That was the target. But with the energy crisis hitting voters' wallets, that ambition could now be more difficult to achieve. Let's bring in Bloomberg's climate and energy reporter, John Anger, with some of the details around this and how the politics of Europe plays in to this ambition in the EU. In 2019, then, John, the election was all about climate. It kind of dominated the political backdrop. The backdrop now very different. Are we seeing a backlash then against the EU's climate agenda? How much risk is there to that agenda and to these targets?
Yes, so as you mentioned, 2019 was the climate election. We saw loads and loads of protests, climate protests across the world, really, and also in the EU. And 5 years later, things look very, very different. We've had COVID, we've had the Russian invasion of Ukraine and the ensuing energy crisis, something that's really hit voters' pockets. And we are seeing a bit of a backlash to that now. We think in the elections coming later this week that the centre will hold its majority, but at the same time, the far right are starting to pick up a large number of seats, and that could alter the balance in Parliament. Now, most of the EU's climate laws have already been agreed, but the key question is how those are going to be implemented. And that's where we could start to see the impact of these elections felt. Parties could start to put in obstacles. They could not agree to funding, which will be crucial to see whether these climate targets are really hit over the coming 7 or 8 years.
The Green Deal, give us the kind of context then, John, in terms of size and scope, how it compares to other plans across other jurisdictions, how significant this plan is, and what the challenges are for getting it across the line then.
Well, so the EU was the first continent that agreed to be climate neutral by 2050. And as part of that, it's put in some of the strictest measures. It wants to cut emissions by 55% by 2030. So it's also moving very, very quickly in this direction. And so just to give you an idea of a few of the key laws that have been agreed, well, perhaps the one that voters are most worried about is this transition to electric vehicles. The EU wants no new carbon combustion engine cars to be sold in the bloc after 2035. We know that electric vehicles are much more expensive than their combustion engine equivalents. But there's also other rules that are starting to hit pockets. There's the carbon market, which from 2027 will be expanded to cover buildings and road transport. And so that means if you're filling up your petrol car, you're likely to pay maybe an extra 10 cents on the euro to do so. And these are measures that without grants, without funding, without subsidies, could start to really become quite unpopular in the bloc and further spur the far right.
OK, Bloomberg's John Anger, thank you very much indeed with the details on how the politics and the changing politics of the EU, of course, in a big election week for the European Union could affect those climate targets and climate ambitions. John, thank you very much indeed. In other news today, shipping giant Maersk raising its full-year profit forecast, saying congestion in the Red Sea is having a larger than expected impact on the world's supply lines, which in turn is boosting freight rates. Maersk now sees underlying EBITDA this year of between $7 and $9 billion, compared with a previous forecast of $4 to $6 billion. That's quite the upgrade coming through from Maersk. Coming up, Treasury yields sink as weak US data fuels Fed bets. They certainly sank yesterday. A little bit of a modest turnaround in the session today. Edmund Shing, Global Chief Investment Officer at BNP Paribas Wealth Management, is here next. We'll get his views on these markets. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. Not so happy if you're invested in Indian stocks and Indian equities, at least for now, for today, because you have reversed and more all of the gains that came through yesterday. Of course, the exit polls have suggested that there would be this sizable majority for Narendra Modi. Now the vote counts have come through and the narrative is changing. It looks like, at least at this early stage, that it will be a narrower victory for Narendra Modi and the BJP party. And so you are seeing a significant sell-off in Indian stocks. The Nifty 50, the 50 Nifty and the Nifty 50 down almost 5%. The Sensex down almost 5% as well. So more than reversing the gains that came through yesterday. A sell-off in bonds, as you can see, pretty pronounced there in terms of the 10-year over in India. And the rupee under pressure versus the US dollar as well, down 0.4%. Let's get some market analysis and bring in Edmund Shing, Global Chief Investment Officer at BNP Paribas Wealth Management. And let's start, Edmund, on the story around India. There'd always been this concern, or at least in the last few months, around the stretch valuations. But the expectation was Modi would get this sizable majority. He would be able to enact his policy. The economic growth would continue in India. Now that seems to be some question marks over this. What do you make of this sell-off? Is it temporary? do you follow this trend, or do you buy the dip?
I think it's a little bit of nonsense, to be honest with you. But this is often the way investors overreact.
Which bit is the nonsense?
Well, the overreaction, firstly, to the upside a few days ago when it went up 3% and now down 5%. It's just very short-term volatility. People are very short-sighted. I mean, the ultimate story about India for the last couple of years has been it's the anti-China trade. Right? People within emerging markets have said, OK, I want to keep some sort of weighting in emerging markets. I can't have everything in the US. But China, no, it's uninvestable. So what have they done? They've invested, obviously, in Taiwan, because they say, I love the technology in Taiwan. And then where else do you go in EM? The destination of choice, of course, has been India, given the fantastic growth rates and given India will be the next China.
The anti-China trade, right? That's one component.
Oh, it's a big component, though.
OK.
In terms of the flows, it's been a big component.
That's the major component.
It's been a big component because there's been a ton of money coming out of China. Foreign investors have just pulled back from China since 2021, really. And they've said, OK, if I keep the money in EM, where do I put it? And India has been one of the safe havens of choice within EM. It's performed very well. But as we know, the Sensex, as a result, has become very rich in valuations. It's always a bit expensive, but now it's really quite expensive. And I think if we think longer term, we have to remember that India is not at all like China. It's not the same story. And that one of the challenges Modi has as Prime Minister is he sits on top of a more decentralized economy than China. You know, each state has a lot more power at the local level, at the regional level, than is true in China.
How does that inform your investment thesis? Because I know you're also looking at China. You think there's an opportunity. You do not think China is uninvestable. So how are you looking at those two jurisdictions and how you invest along those in the longer term?
I do like India, but I think people are getting a little bit overexcited. And I think there are some challenges to certain segments of the Indian stock market. For instance, if we take the IT services sector, which has been the powerhouse, it's the most famous part, the most expensive part of the Indian stock market. That is one of the sectors that could actually come under the most attack from artificial intelligence. You know, if you listen to people like Peter Thiel who say, don't need programmers, don't need maths nerds, you want to be creative, you need verbal skills. Well, by the way, if AI can program better than the programmers, why do we need the IT service companies? Why do we need the call centres? Because we're just going to use chatbots, which are better, more efficient, and a lot cheaper.
OK, I feel like I could spend a whole show talking to you about what's happening in India. But we need to switch focus to the US as well, because we had data overnight, which for some will feed the narrative that maybe you're starting to get a benign cool down in the US. Others would say maybe we're on the fringes of a recession. We've had a bit of softer data when it comes to the US consumer. The manufacturing data out of yesterday as well, coming well below the expectations. Where do you land on it? Is this a benign slowdown that we're seeing on the US, or is it the start of something uglier?
Well, for now, I think it could be a benign slowdown. It could turn into something uglier. It depends how quickly the Federal Reserve reacts, and also it depends on how the employment market changes. The employment market clearly has been fantastic. Great for the consumer, you know, basically full employment, a bit more than full employment, if anything, and wage growth, which has been extremely robust, if anything, too robust, which is why we've had higher than expected services inflation in the US up to now. The employment outlook is clearly weakening. We can see that from a whole bunch of indicators. They're all pointing the same way. It's been great. It's going to cool down, which on the one hand is great for inflation because it means wage inflation should trend lower. Great for the Fed, means maybe they can cut they can cut rates sooner than the market was expecting. On the other hand, if the Fed doesn't cut and the economy continues to slow down, then that recession call becomes a little bit more worrying. It becomes a little more, you give it a higher probability all of a sudden. So very much depends on how the employment outlook slows. Does it slow slowly or quickly? And does the Fed react, or does it sit in its hands a bit too long, which is always the risk the Fed could make a mistake.
OK, and the non-farm payrolls data out on Friday could give us a little bit more colour on that. Will give us a bit more colour on that. When it comes to the bond rally that we saw yesterday, do you see that rally having legs, at least in the short term?
Why not? Yes, I think so, because when I look at the inflation components, which have been a bit too hot in the first part of this year in the US, which has made the market a little bit worried, and we've seen all these revisions to the number of rate cuts from the Fed this year as a result, it's actually been not very many components that have been too hot. It's been everything to do with housing, but we know the whole calculation of housing inflation is weird. Yeah, it's very lagging, it's very backward-looking, blah, blah, blah. And if you look at real-time data, it's a lot lower. So actually, that suggests to me in the next few months, the housing CPI part should cool down. Things like car insurance, medical care, there are very specific elements. But you know what? These things could cool, and if they do, inflation could be closer to 2% faster than you think.
Interesting. Edmund, we've run out of time. Thank you very much indeed. Really great analysis, really great take on what's going on and rippling through these markets for us. Edmund Shing, Global Chief Investment Officer at BNP Paribas Wealth Management. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. A red head crossing the terminal just in the last few minutes. Airbus in talks to sell more than 100 wide-body jets to China. We'll look at that stock, of course, at the market open at 8 a.m. UK time. A beneficiary, arguably, of the geopolitics and the travails of Boeing. So Airbus in talks with China around 100 wide-body jet sales, potentially. Let's flip the board and have a look at Indian assets because, wow, what a sell-off in the session today. A reversal and more of the gains that we saw yesterday as the vote count comes out in India and suggests that Modi will have a slimmer majority than these markets and many others had expected. A loss then of 4.5% so far on the Nifty. A similar picture on the Sensex, a drop of more than 4%. Spons as well under pressure, selling off over in India. Yields up almost 11 basis points and a drop in the rupee versus the US dollar of 0.4%. This is a story we will be keeping across in the next few hours. Of course, the importance of India and the surprise that's coming through from the vote count. The Markets Today show is next. More analysis on these markets. This is Bloomberg.